Joining me now is the team from North Block, the budget architects. With me, the Economic Affairs Secretary Ajay Sheth and the DFS Secretary Vivek Joshi, the budget architects. Gentlemen, congratulations on a budget that has been very well received from all quarters. Economic Affairs Secretary, if I may start by asking you about the growth estimates as well as the projections that have been made in the budget. 10.5% nominal, and by most accounts, that is what the market was expecting, between 10 to 12%. The survey had gone with an 11% number. Why did the budget go with 10.5?
So like last current year, 2022-23, we believe in having or adopting conservative numbers. So there are no adverse surprises moving forward. So 10.5% nominal growth rate we feel is a reasonable assumption, and that has served. Like current year we had presumed 11%, and that served as well. It turned out to be higher for various reasons. We do expect that in the coming year there may be an upside surprise on the growth side, which economic survey presumes 6 to 6.8%, and perhaps it can be on the higher side rather than the lower band. And inflation, of course, we expect it to cool down, and it's already come down below 6, maybe around 4% or so. 10.5 should be a doable number.
10.5 should be a doable number. You said that you hope to get closer to the higher end of the estimate, the band that has been projected by the Chief Economic Advisor of 6 to 6.8% in terms of growth. What are the upside factors that you're working in? What could potentially take us to the higher end of that band?
See, this year, the latest estimates are showing the current year economy will grow by 7%. We do understand that global environment is quite tough, so there will be an impact on exports. At the same time, the investments in Indian economy, gross fixed capital formation, is doing very well, and that momentum is still there. We expect that coming into the next year, that momentum will remain. And at the same time, so private investments is back. At the same time, government has not just maintained, it has stepped up public expenditure on capital assets. So that should further strengthen the investment story.
On inflation, you said that you do expect inflation to cool off significantly, and we've already started to see inflation taper. The global scenario is different. The economic survey talks about well-entrenched inflation leading to a longer tightening cycle. What gives you the hope and the confidence that we will see a further tapering in inflation, especially given the fact that China has bounced back, there is a reopening that could have an impact as far as commodity prices, etc. are concerned? What are you factoring in there?
There are several factors are there. Yes, in the advanced economies, the inflation levels are much higher than what their comfort levels are. At the same time, it may lead to cooling down of their economy, and that may have itself an effect on cooling down on the prices. There are few elements where the prices are imported, meaning that on imported prices, imported inflation, that we can do a very little about it. But the bottlenecks into the Indian economy in terms of the capacity issues, etc., that have been more or less sorted out. So we expect that as the inflation is there, it should be much more moderate than what we have seen in the current year.
Two quick questions before I get to you, DFS Secretary, and I've got a plethora of questions linked to the change on the insurance side that I'll get to you with. The expectation was that the government would announce more PLI schemes. That hasn't happened. I would imagine that it doesn't deter you from announcing PLI schemes outside of the budget, but what should we make of no additional PLI schemes being announced in this budget? Is there a need to consolidate on the ones that are already in execution at this point in time?
See, there are a very wide variety of sectors which have been covered, and especially where we were importing quite significantly. And if you recall, a significant amount has been given for the solar panels, and where we import more than 90% of our solar panels requirement. So at this stage, consolidate and then move forward is not an ever-expanding list. So the sectors were identified with a lot of care, and it's the time to see that happening on the ground and then take a decision thereafter.
The question on the extension of the FAME subsidy scheme, because that's something that people want predictability on, since they are making investments in electric mobility, which is the sunrise sector, the nascent sector that the Indian government has been batting on. The sun sets in 24. What should we make of the fact that the budget doesn't talk about it at all? Does that leave the window open or the door shut?
The budget deals with several issues, but at the same time, it has to prioritize what are the most pressing issues at this point of time, which needs a solution and which needs an answer to be given. So it doesn't mean that all challenges into the economy have to be...
No, I understand, but people are making investments, so they would like to know if this is going to continue or not come next year.
That decision has to be taken down the road, not today.
Okay, that decision is yet to be taken, so the door is not shut, the window is open.
I would not like to comment further on that.
Okay. DFS Secretary, let me address the bank question, because no recap, and that was along expected lines. But again, no clarity on what happens as far as bank privatization is concerned, with the exception of IDBI Bank.
So IDBI Bank is, we are doing the bank privatization, but for the previous banks, we have yet to take the appropriate time. When it comes, we will announce it.
No legislative changes being moved, and no clarity or timeline given on whether the government intends to move on that.
There are some changes proposed in the banking regulation
That's
act,
right.
but they are not related to disinvestment. They are basically related to
on capability and capacity building.
Yes, on nominations in deposit accounts, articles in safe custody, safety lockers, and the rules of the priority of nomination, etc. Then there are substantial interest which have been is proposed to be redefined, and the submission of statutory reports by the banks to the RBI.
Yeah.
There are some changes. These are I would say.
So it would be fair to say that bank privatization and the legislative amendments required for that are off the table, at least for now? He's looking at you,
like
Mr. Seth. You want to answer that?
See that IDBI, the process is well underway, and that is something that's being looked at. As far as other issues are concerned, these are the processes which are there. When it reaches to a decision level and then it has to be shared with the economy at large, at that point of time, government would be sharing those details.
Okay. Let me address, as I said, I've got a whole host of questions that have come in on the insurance side, the withdrawal of exemption for life insurance policies when the premium exceeds 5 lakh rupees. Question number 1, is the 5 lakh threshold for premium paid in 1 year or over the term of the policy? Question number 2, if a person pays 2 lakh rupees as a premium on one policy and 5.1 lakh on the other policy, will only the proceeds from the 5.1 lakh premium policy be taxed? Is there a threshold per policy or aggregate of all policies? So if, for instance, somebody has 10 policies, how can you explain to us how this is going to work exactly? Mr. Shet.
Some of these questions, please reserve it when my colleague, Revenue Secretary, comes in here.
I'll ask him as well.
Okay, but here what the basic approach to this matter is that as far as pure insurance product policies are concerned, that is no taxation or nothing is happening to them. But if that is used as an investment opportunity, what this budget tries to do is covers those, not the general insurance if it were to be. So one has to take that nuanced approach has been taken, but in terms of the exact details, I'll suggest when my colleague is coming, please pose those details.
I will pose that question. Dear Secretary, let me also address the issue of startups, because there was a lot of expectation that on the back of the Damodaran Committee report that has been submitted to the government, that many of those recommendations would find their way into the budget. That hasn't been the case. One concern that has been raised, and I'll get you to clarify, the impression is that startup valuation beyond fair market value will be taxed as income if the capital is now from a foreign source. This was the case for domestic capital, but the impression is that now foreign capital will also come under the same net. Could you clarify this for us?
See, that committee headed by Mr. Damodaran has done a very comprehensive work, and they have talked to several stakeholders, and that report came to us in mid-December, and then we didn't have sufficient time to give it a careful look. We had a choice to take it a few issues out of that report, but we decided that it's such a comprehensive report, it requires a one-shot approach rather than doing a piecemeal approach. So in the coming months, we will be carrying forward our analysis of the report and then coming out during the course of the year.
Okay, so you haven't acted on the recommendations that have been made by the Damodaran Committee, but you believe that over the course of time, the government will take those recommendations.
Certainly, there's a purpose, and we did try, whether we did contemplate whether we can pick it up a few items out of that, but then we felt that won't be right, because it's such a comprehensive report, and it was done through a process, and they have done such a good exercise. So we should address comprehensively rather than in a piecemeal manner.
Well, speaking about addressing something comprehensively, again, the expectation was, and this is on the back of public comments that had come in from many of your colleagues in North Block, that we could see a change or an overhaul as far as the capital gains tax regime is concerned. The good news, at least from a market's point of view, was that nothing has been done. Why did the government stop short of acting? Again, is the consultation process still on there? Do you believe there is a need for further feedback, for further dialogue before you take the next step?
Obviously, there's an economic perspective to that, but I'll prefer that my colleague,
the Revenue Secretary, answers that as well. But your take on that? I mean, was this widely debated within North Block?
We discussed several issues, not just one, but we discussed several issues as a team, and then we'd come out with what needs to be addressed in this budget, and thereafter the rest are.
One of the other issues that hasn't been addressed in this budget is the issue of the cryptocurrency. Of course, in the last budget it was brought under the tax ambit, but there is no clarity on whether the government intends to move a bill in Parliament, etc. Is that again something that is on hold till there is global consensus on how cryptos ought to be dealt with?
Certainly, and this is the thinking now emerging in several countries, that this asset class cannot be regulated by one jurisdiction. There has to be a fair amount of understanding, the broad approach to be done, and the discussion is very much on in the G20 platform. In fact, in the coming ministers meeting in February in Bangalore, we are organizing a seminar, and it is getting into the discussion. So we do expect by the end of the current calendar year, a broad consensus should be possible as to where one is reaching it, what the policy approach should be, and thereafter, of course, each jurisdiction will take its own time and pace it, that what should be the extent of the regulation one would like to bring in.
I'll end by asking you, somebody on the channel called this a CCC budget: consumption, capex and credit. Credit offtake has picked up. Double-digit credit growth is what we saw the economic survey also highlights. Do you expect that to continue, for that to remain as robust?
Yes, I think it will continue, because all banks are doing very well. All the results which they have announced for this last quarter have shown the credit offtake of approximately 18% growth on year-on-year basis. So I think so.
It will continue. Well, this is just part of the team from North Block here, the budget architects, who are finally going to get a little bit of rest today, I would imagine, after having really played the slog over a good part of the month. Ajay Seth and Vivek Joshi, many thanks for joining us here on CNBC TV18 with your take on the union budget and addressing some of the fine print with us. We'll take a quick break. Don't go anywhere. More secretaries coming up right after this short break. Stay with us. We're back in a moment.
Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
It's the electric SUV with the fastest acceleration in India. It's the most spacious in the C segment, and it can be yours now. Starts at Rs 15.99 lakhs. Bookings open on 26th January 2023.
Axis Mutual Fund presents Axis Business Cycles Fund NFO, an opportunity for you to be a part of India's growth story. NFO opens February 2nd. Log on to axismf.com or speak to your mutual fund distributor or registered investment advisor today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Amusement park तो बंद है.
The all-new Slavia.
We're continuing our coverage here with the budget architects, the team from North Block here with us at the CNBC-TV18 budget headquarters, decoding the fine print of the budget that has unequivocally got a very positive response across the board. Joining me now, Nitin Gupta, the chairman of the CBDT, and Vivek Jory, the chairman of the CBIC. Gentlemen, as always, many thanks for joining us here on CNBC-TV18. Mr. Gupta, let me start by asking you, because the big question is, will the new tax regime take off? The government is hopeful that with the changes that have been made, this will be the inflection point. But do you believe that people are ready to give up on their exemptions and move to the new regime? Have you put enough on the table for them to do so?
Yes, there is enough on the table for each and every taxpayer to switch over to the new regime. And when there is a saving of money, I believe that, and this is the belief of the government, that people will shift to the new regime because that will give them flexibility to invest wherever they want to invest in case they want to, or otherwise it will be a hassle-free scheme which has been designed by the government.
Revenue foregone is about 35,000 crores. That is what the budget has estimated on account of this. But you must have done some scenarios on the basis of which you've arrived at these slabs and the impact on consumption, on the increase in disposable income, etc. What made you fix these particular slabs, and what do you believe will be the benefit that will accrue for the benefit of the layperson if they were to make the move?
We have done a lot of studies before coming out with the proposals, and what we have worked out is at every level the taxpayer will be benefited. There will be something left in the pocket of the taxpayer in terms of the tax payment which he is making.
Can you quantify that approximately?
Yeah, at every level, like about 15 lakh, it will be around 52,500, and below that it will be depending upon the income slab which the taxpayer is as of now having.
Okay. Mr. Jory, let me address the big number that came in before the budget. So there was a surprise on the GST front at and the highest since 20...
April,
yes, that's correct. So do you expect that this kind of buoyancy in GST collections will continue?
Yes, I think so. So for the last couple of months, in fact, the whole of this financial year, Timsi, we've turned in more than 1.4 lakh crore each month. This is the central and state GST taken together. So I think that's the new normal, and as we work further on compliance and improving, ease of doing business, I think we'll see better revenue collections. Apart, of course, from the fact that the economy is also picking up, and that will give a further boost to revenues.
We didn't see any big changes as far as customs, etc. were concerned this time around. In a few items, we did see some changes, some inversions being corrected and so on and so forth. But on balance, it seems to be that a lot of the heavy lifting that has to be done on that front, has that been done?
No, in fact, I'm surprised you say that, because on the customs rate structure, there's been a very big change.
Okay.
Which is that the rate dispersion, as we call it, which represents, the range of rates that you have of customs duties, that has come down very substantially in this budget. And from 21 rates of basic customs duty, we've been able to bring them down to 13.
Okay.
So that's a very sharp cut, and that will obviously lead to much more simplification in the rate structure, making the life of taxpayers that much easier, because, there'll be lesser disputes about rates. The other thing is a carry forward of work that FM had announced in the last budget, which is review of customs duty exemptions. So there's a very large number of exemptions that we have reviewed once again. Some it has been decided to continue because they're required for the economy, but there are some which have also been abolished. So from the simplification point of view, I think the budget has done quite a lot on customs tariffs.
Okay. Let me address the tax to GDP issue with you, because this is again an area where we have seen good news and improvement over the last few years. In fact, I believe the tax to GDP ratio has gone up now to about 7.8% of GDP. That's the number that Moody's has put out. Given the fact that you now have much better data analysis, the two of you are talking to each other, that silo has been broken. What should we realistically expect in terms of the roadmap from here on?
We have been conscious of this fact, and tax GDP ratio has been rising over a period of time. Direct tax GDP ratio has been around 6% in 21-22 and must be rising in the near future. So that has been a constant endeavor of from our side, from CBDT side, that direct tax to GDP ratio should rise, and that has been the, I think, goal of the government as well, for overall tax GDP ratio to be improving.
You know, the ease of doing business and bringing down compliances, that continues to be the thrust as far as the government is concerned. You alluded to some of that as well. What more can we expect on that front? What is going to be the priority as far as both the departments are concerned? Let me start by asking you.
See, we are using technology in a big way to ease the way in which the taxpayers interact with us, and there has been a lot of positive feedback, and there is improvement in trust between the taxpayer and the department, and which has been visible in terms of the processing which we have done this year, in terms of the refunds which we are issuing, the quickness in which refunds have been issued. So I think we are doing fairly well. There is a lot of data exchange, as you have rightly said, between the law enforcement agencies and more particularly with the CBIC. And that data is being used to nudge the taxpayers, and we are getting good results out of it.
On the enforcement side, you know, especially on the GST side, we've seen things being fairly active. What's the indication from here on?
So, Timsi, I think there are 2-3 things that I would like to talk about from the point of view of ease of doing business. Let me begin with that on the GST side. If you've been following the story, you would have noticed that we have been working very actively towards trying to move to a system where over a period of time, and this is medium term to long term, I think the filing of returns itself would become unnecessary, because if you have the entire transaction level data of the invoice captured electronically, and as we drop the threshold for raising e-invoices under GST, there will come a time when you really won't need people to file returns, or at least you would be able to construct their returns based on the invoices, which is going to be a very big spin-off of digitalization from the point of view of ease of doing business. So that's one. Secondly, I think the one big point which I would like to focus on, which has happened in this budget, is to use PAN as a business common business identifier. Now, that of course speaks directly to ease of doing business. But if you look at it from the point of view of being able to integrate databases, not just CBDT, CBIC, but a whole lot of others which are dependent on PAN, there's a world of analytics that you can do with that data. And I think that will go both for improving compliance and for your ability to auto-populate returns, whether it's direct taxes or indirect taxes. So I think these are the kind of things that you can expect more of digitalization. The third thing that I would like to talk about is that we're making much better use of data that we have in the system. And we're trying to use artificial intelligence and machine learning very actively, so that the discretion at the level of the field officers is curtailed. And in a centralized manner, we're able to identify the risky taxpayers or importers, exporters, and target in a very pointed way, you know, the wrongdoers or people who are violating the tax laws. So I think these are 2 or 3 broad themes that we are working on.
So feel confident of the tax numbers?
Sure.
Sure. That is short and succinct there from the CBDT chairman. Gentlemen, we will of course continue our conversation at the CNBC-TV18 budget verdict, but thank you very much for joining us for a first cut here at our budget headquarters, and look forward to having you both join us tomorrow as we get industry to interact with both the chiefs of the CBDT and the CBIC. We're not done yet. It's the slog overs. We've got plenty more to go. Come back to us after a very short break. We will resume with the CNBC-TV18 Budget Town Hall. Industry leaders, top government ministers, join us after this short break in a moment. Hello and welcome to the CNBC-TV18 Budget Town Hall. That sums up the mood that corporate India, economists, the markets and the common man have shown at the end of Budget 2023. It has been an unequivocally positive response across constituencies. Not too much to quibble about. There are, of course, some details in the fine print that have required clarifications, which we've been bringing you here on CNBC-TV18. But it is now time for the CNBC-TV18 Budget Town Hall. We will be joined by the Railway, the IT and Telecom Minister Ashwini, Vaishnaw in just a short while from now. But I have with me leaders from corporate India right here at our CNBC-TV18 Budget Headquarters. Shardul, Shroff, Sanjiv, Bajaj joining us, Subhrakant, Panda, Rajiv, Memani, Zarin, Daruwala, Suneeta, Reddy, Subhrakant, Panda, Sinha will be with us shortly as well. And of course, I will be joined by Jayant as well, the chair of the Parliamentary Standing Committee on Finance. So that's a good start that we bring Jayant into the conversation. Mr. Sinha, thanks very much for joining us here on CNBC-TV18. Appreciate your time. As I pointed out, you know, the former Revenue Secretary sitting right here beside me gave the budget 11 on 10, and the response across different constituencies has been positive. I think the biggest takeaway has been that while the government continues to do the heavy lifting on capex with a 33% higher allocation, it hasn't done so by deviating from its fiscal consolidation glide map, and the budget numbers by all accounts seem to be realistic and credible. Jayant Sinha, how would you sum up Budget 2023?
Shireen, you summed it up by saying that everyone is happy. This is a budget that I think is a very forward-looking and a very well-balanced budget. What is most notable is that even as we are stimulating consumption through a middle-class tax cut, we have also at the same time dramatically increased capital expenditures from 7.5 to 10 lakh crores. And we have put that capex in all the right areas. It's gone into green growth. It's gone into forward-looking industries like batteries, like smartphones, like electronics. And also we have worked on the empowerment of more vulnerable sections of society, for example, through cooperatives, for women self-help groups, for tribal communities. So it's that balance that is so elusive in budgets that this budget has been able to demonstrate. And I think that's why you're finding that everyone from the middle class to captains of industry to people living in far-off tribal villages are very happy.
Well, you know, that balance that you speak of, and you're absolutely right, given the many pulls and pressures as well as the uncertainty that we are faced with, especially as far as the global front is concerned, the balance is something that is hard to come by and hard to strike. But it's also been possible largely on account of what the government has been able to do on the tax front. And once again, by all accounts, it seems to have been more conservative in its tax estimates, and the expectation is that it will do better again.
Absolutely right, Shireen, and we must commend the Honorable Prime Minister and the Honorable Finance Minister. They have navigated the ship of state through a very stormy and turbulent period when we've had, of course, a once-in-a-century COVID pandemic, and then we've had the war in Ukraine with a commodity price shock, and then we've had this very abrupt central bank tightening cycle that's also underway. Despite all the vicissitudes, the economic management has been absolutely outstanding. Yes, we have spent when we've had to spend, which is why the fiscal deficit went up. But when the stimulus was not required, the spending has come down. We've got a fiscal consolidation glide path. But most importantly, the prudence and pragmatism of our top decision makers is extraordinary because they have overachieved on all their numbers. If you look at where we are on tax collections, if you look at where we are on growth, on inflation, on all the important macroeconomic parameters, you will see that we have overachieved on all of the numbers. And that's why India now has this credibility globally, which really is part of the reason why everybody sees India today as the shining star in the global economy.
Well, yes, it is certainly a bright spot in terms of growth at this point in time, and that has been made possible on account of the kind of growth that we've seen and a projection of growth for the coming year as well. Zarin, Daruwala, thanks very much for joining us. You know, to pick up from where Jayant Sinha left off, what will global investors take away from Budget 2023?
I think a very important thing has been the investment in infrastructure that we've seen, because for MNCs what is important is that the logistics cost, which is high, is coming down thanks to the infrastructure, plus the integrated approach to infrastructure that we are seeing is also very important to reduce the friction in the logistics cost. And that, to me, will be a big fillip for manufacturing, more and more FDI coming into the manufacturing sector in India.
Yes, the hope is that we will be able to draw in more FDI into the manufacturing sector. Let me bring in our industry captains who are here with me as well. And Shardul, Shroff, let me address the issue of what you liked particularly in the budget. Because while we've all focused on the headline numbers, CapEx, railway CapEx, defense budget and so on and so forth, there's plenty of details outside of that as well. What did you like there?
I think the emphasis on new industries, emphasis on education, emphasis on health, legal aspects of resolution of matters between the MSME and also between government undertakings, the Jan Vishwas bill, which sort of reduces compliance, and the decriminalization process. So there's a lot if you look at it from even the perspective of a lawyer.
You know, specifically since you brought up the issue of litigation and dispute resolution, the Vivad Se Vishwas 2 scheme that has been announced by the government, of course we are waiting for the fine print in the rollout, but a graded settlement scheme is what the government has proposed. What do you make of that?
I think it's necessary because it's always in an inverse proportion. The larger the dispute, the lesser the percentage of claim which should be allowed or should be the same, because ultimately the financial outlay has to come from budgetary purposes, especially if government is to pay to a government undertaking. The reverse may be not budget bound, but it's something which has also got a sense of allocations for government undertakings. So it had to come on a graded basis. It could not have been 100%.
It could not have been 100%. Sanjiv, Bajaj, you've now pored over the fine print. This is the third time that I'm speaking with you this evening. I think that confusion or clarity that was required, even on the insurance side, I just had the Revenue Secretary issue that clarification. Does it seem like, it's not going to have any material change, material impact as far as the insurance space is concerned?
Well, the little that we have looked at it and I've talked to other colleagues, there is still some clarity required over there, but as the people in the ministry are telling us that this government is moving away from subsidies, from exemptions, and just to lower tax rates. So I guess it's par for course over there.
Suneeta, Reddy, many thanks for joining us here on CNBC-TV18. There's been a substantial increase as far as the health budget is concerned. Many other announcements coming in, 157 nursing colleges which will be co-located with the medical colleges that have been set up. For the healthcare sector, Suneeta, Reddy, on balance, what has Budget 2023 delivered?
I think the government, if you look at the economic policy review, the government has already done so much for healthcare, and healthcare services is growing at 9%. So I think that alone is credible. If you look at the 157 skilling centers for nurses, much required nurses in our country, allocation for health at 90,000 crores is an improvement by 17% over last year. And I believe it's a meaningful allocation. The nuance of looking at sickle cell anemia shows that the government has really done its homework, and the fact that it's very equitable in the way that it is presented the budget, not only in the tax reform, but as well as creating access for tribal populations, for those who can now go to skilling centers. All of that, I believe, is increasingly going to help the Indian population, and I think the 90,000 crore allocation for health is a very good move by the government.
Yes, that certainly is a good move by the government. Rajiv, Memani, at the end of the day, is it going to keep the tax individuals like yourselves more busy, or there's going to be no reason for you to be consulted at the end of this?
No, I'm sure we'll be busy. We'll be busy because the economy is going to grow. We are entering the Amrit Kal. We'll be busy for sure. But I would say, if I have to pick up 2-3 key things, one is I think the moving to the new personal tax regime. I would think, Shireen, if you look at up to 15 lakhs of income, and if you were to assume there was no deduction on both sides, the tax impact of that works out to about 1,10,000, 1,12,000 rupees. So which means that your deduction should be around 4 lakhs. So my sense is those people who have income levels of up to 50 lakhs will probably be migrating into the new regime. Between 50 lakhs to 5 crores, if they are not availing HRA, if they are availing HRA, they'll probably stay with the old regime. And above 5 crores, I think most people will be migrating towards the new regime. That's the sense that we get. The second thing which I think, as we were just pouring through the details, I think the angel tax which was there earlier, which was meant for mainly for residents, this is really for companies issuing shares to non-residents.
Right.
I think there now they've applied to residents. Now they've included non-residents. So
right.
I think that may impact FDI, especially in terms of private equity, venture capital.
I'm going to just ask you to hold that thought because joining us now is the Railway, IT and Telecom Minister Ashwini Vaishnaw. Mr. Vaishnaw, many thanks for joining us here on CNBC-TV18. Sir, appreciate your time. Well, it's been a significant railway capex that has come your way through the budget. 2.4 lakh crore rupees being allocated, the highest ever as far as the railways are concerned. Mr. Vaishnaw, how do you intend to spend this?
So, first of all, I would like to thank Honorable Prime Minister for giving so much focus on railways. And this budget, basically, as we all know, in very troubled times, India has emerged as a bright spot. And this budget will make India as the growth engine for the world economy. And with respect to railways, the allocation for capital investment is 2.4 lakh crore, and this is a very good allocation. Railway has made significant progress. If you see 10 years back, in the UPA times, basically railways used to do just about 4 kilometers a day new tracks. This year we are doing about 12 kilometers a day. So there is huge progress in terms of laying new tracks, doubling the tracks, making sure that the tracks are innovated. Then there is huge focus on redeveloping the stations. In Amrit Bharat station scheme, we have taken up 1,275 stations. Many of these are very large stations, many of these are medium stations, and many of these are small stations also. So such a large program for totally transforming railways, this is what this budget allocation means. Last year we took 3,000 kilometers of coverage. This year we are taking 5,000 kilometers of coverage. And as you are aware, the success of Vande Bharat train is like everybody is appreciating the train. And now we will ramp up the production. Currently the production is at ICF Chennai only. Now we'll add 3 more plants, one at Latur, one at Sonipat and one at Raebareli to produce Vande Bharat trains. So there is a lot of excitement in railways, complete transformation of passenger experience and rapidly increasing the cargo share which had gone down to 27% in terms of road versus rail. Now we have started climbing back. And last year it was 28%, this year it is likely to be 29% of the cargo share. So that way there is a lot of growth opportunities in railways, yes.
But I also want to understand, what are we talking about in terms of addition? There are reports suggesting that 400 more Vande Bharat trains could be added, etc. Could you give us some sense of what we can expect in terms of the pipeline? And also, a quick word as far as the railway's own performance is concerned, operating ratios, where do things currently stand and how much better can you improve that, given what you just spoke of in terms of freight and cargo, etc.?
So there are 3 questions in your question, so I'll take all of them one by one. First one, in terms of Vande Bharat pipeline, when a new product is designed, we have to first test and make sure it becomes stable and the supply chain also starts ramping up. So by now the supply chain has become very stable, the product is stable. Vande Bharat trains have, the 8 trains which are running, they have, like if you cover the perimeter of the earth, then practically 52 times they have covered they have traveled around the earth. So So that is the kind of magnitude of close to 45 lakh people have traveled. So now we have to ramp up the production. We are producing now almost 1 train every week or 8 days, and now we have to take this up to 3 trains or 2 trains every week very soon, very rapidly. So that is the ramp up we are looking at, and this is probably one of the highest ramp ups anywhere in the world. So that is the close to about 400 trains are in the pipeline, and over a period of 2 to 3 years we should be seeing railway technology exports in good magnitudes all over the world. So that was the first part. Second, about the operations and financial performance of railways. As I said, railway was losing market share for a significant period of time because there was very little investment in railways, and the practices and everything which Prime Minister has reformed over the last 8 years, now railways started gaining back the market share. So from the low of 26%, 26-27%, 28% was achieved last year, and this year 29%. So with increased market share and adding close to about 300 million tons in the last 8 years as additional traffic, additional cargo, this has helped railway break even, and we are today able to meet all our expenses from the revenue which is earned out of railway. So for capex, yes, we are dependent upon the government budget. For opex, practically we are able to meet the entire expenditure. So that is where we stand. The coming 2 years will be really turning points for railway, because as we create more infrastructure, we are able to carry more cargo. For example, in terms of wagon, we placed an order for 85,000 wagons, right? So that was one of the largest in the world anywhere. So that has helped us induct about 150 new rakes. This year by December, we should be able to roll out the first hydrogen train, and then we will manufacture using that technology for all the heritage circuits like Lonavala, like Uti, like Kalka Shimla, like Darjeeling, like Mathiran. All these places we will run hydrogen trains, and I mean it's going to be a very nice technological journey ahead.
I'm going to ask you to take off your railway minister hat and put on your telecom minister hat, Mr. Vaishnaw, and put a question to you as far as the capital infusion into BSNL is concerned. I think it's being pegged at just about 53,000 crores for FY24. Also, the revenue realization from the DOT being estimated at 89,469 crores. Achievable?
Absolutely achievable, and these reforms that Honorable Prime Minister did in the telecom sector. Today telecom sector is a growth sector, it's a sunrise sector. Lots and lots of investment is coming in. The BSNL capex that you're seeing, this capital investment will go for rolling out the Make in India Atmanirbhar Bharat telecom stack 4G and 5G. By end of 2023, BSNL would have rolled out made in India, designed in India, developed in India 4G and 5G technology stack. And I must tell you, the world is waiting for this solution. Already 2 countries during Davos met me and confirmed that they would like to roll out, deploy India's technology, telecom technology, as soon as we would have put about 20 or 30,000 sites in place. So it's telecom is a growth sector now. It's sunrise sector, and lot more innovations, lot more reforms, lot more investments, lot more employment in the sector.
And finally, I know I have to let you go, but I can't let you go without getting you to put on your third hat, and that is the electronics minister's hat as well, Mr. Vaishnaw. And I promise you this is going to be the last question. The announcements that have come in the budget as far as the electronics sector is concerned, on balance, how confident do you feel about being able to continue to grow what we've seen happen as far as the mobile phone PLI scheme is concerned and more?
See, the budget announcement is very conducive, very helpful for the growth of electronics manufacturing. As you are aware, already we are at a situation, at a position where this year the mobile phone exports will touch about $9 billion. mobile phone will become among the top 10 commodities to be exported out of India. Now the component ecosystem has started shifting to India. With the component ecosystem coming, the virtuous cycle of exports will actually increase dramatically now. It will be like hockey stick growth, and with the tailwinds in terms of policy and customs, the most critical component is lens, and the duty on lens has been reduced. So all these factors together, very stable policy, very good talent base, very good support from the government, huge employment getting generated in mobile phone manufacturing, all these factors together will see India emerge as the major mobile phone manufacturing and exporting sector. We are already number 2 manufacturer in the world, and today's budget will give further boost to it.